Hello and welcome everyone to Silver Asset of the Day for the 3rd of September 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the end of the week here, what do you need to be aware of? So first of all, in terms of hedge fund and money manager positions, in the last week, we've effectively seen no change in the overall net long position in silver. So from those hedge funds and money managers that do have a position on silver, 56% are long. And this is also being reflected in the price over the course of this week, which has been relatively flat, stuck in a very tight range between $23.80 per ounce up to just over $24 per ounce. We continue to see gold outperform silver. The gold-silver ratio has broken back out to 76-1. We have the dollar right now trading near multi-week lows. However, we have seen impressive moves this week on oil, on palladium and copper. So as we mentioned to you at the start of this week, we booked 4,750 points profit on our palladium position. So of course, for every one lot contract that you'll be trading, that's $47,500 of profit. For every 10 lot contract that you'll be trading, that's $475,000 of profit. That was a very fast move on palladium. Last week, palladium had its biggest one-day move since May of 2020. Now, over the course of this week, oil has continued to gather momentum as well. Last week, oil gained by 10%. This week, it's up over 4%, back above $70 per barrel. It's been an impressive recovery for crude oil prices and also for copper as well, up over 3% in the last week. We've continued to capitalize on that breakout by having positions on copper and also palladium. Now, as it relates specifically to silver, the next major news item you want to look out for will be Friday's non-farm payroll data, which is typically a catalyst for big moves for gold and silver prices. However, right now, we are seeing relatively muted price action on silver. So what I would look out for and be mindful of is that normally going into the second week of September, there can be downside pressure on gold and silver once we get through that US public holiday, which is the Labor Day in the USA on Monday. And then later on next week, we have the European Central Bank announcement as well. Those events can cause pressure to the downside on the metals and capital to flow back into the dollar as positions, as markets start to move a bit more into risk off, particularly as we then transition into the middle of September, where we're getting much closer to contract settlement, quad witching in the market. And alongside that, we have end of quarter profit taking as well. And we have public holidays in China too, as we get into the third week of September. So all of these events, they can create opportunities for traders to book profits over the last quarter, move back into the dollar. That creates strength for the dollar and essentially some weakness on the precious metals. So just be mindful of that, because what we will likely see over the next week or two is many traders, particularly on gold, start to FOMO in, buying too high. And then very simply, technical traders essentially getting their delayed confirmation. They end up buying too high right at the top of the move just before we get a typical pullback over the month of September. So I very much watch out for that. We saw it last year and the previous year where many traders got trapped buying too high into gold, only to then get liquidated on the corrections that we saw later on in the month of September, particularly with all of the end of quarter profit taking. This comes back to where you want to be utilizing a research driven approach in the market, utilizing data, market intelligence, statistics, facts in the market. Be aware and learn the daily, the weekly, the monthly, the quarterly cycles for each commodity. Alongside that, understand macroeconomics, fundamentals, the news items, which will be the biggest catalyst to have the highest impact moves on commodities. Alongside that, you also want to be looking at the intermarket correlations, the ratios in the market, and of course, understand key areas of liquidity and capital flows. And then finally, understand how hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click on the link below today's report in order to make an application to join our professional mentorship program.